ARM Cement, East Africa's second biggest producer behind Bamburi Cement, posted a pre-tax loss of $4.5 million for the first 6 months, which the firm blamed on unrealized foreign exchange losses associated with borrowing for its new clinker plant, a vital raw material for cement. But now with a new plant to produce clinker, the firm expects profitability to improve. The clinker plant has a capacity of 1.2 million tons a year and is operating at about 75% capacity since production began in April.
Throughout 2013 and 2014 we were importing clinker, but this has now been supplemented with clinker that is produced in Tanga in both Kenya and Tanzania. What this essentially means is that our production cost has come down drastically because imported clinker is much more expensive, at least 70–80% more expensive than what we are producing locally. So we expect an improvement in our margins both in Kenya and in Tanzania.
Currencies in East Africa, where infrastructure and other construction projects are pushing up demand for cement, have been weakening this year, partly as a result of a global shift away from emerging markets and into the US dollar. However, Ponrana says he expects an improved financial performance in the second half of the year, citing a 9% rise in earnings before interest in the first half to about $19.5 million.
Results for the first half showed a unrealized exchange loss and therefore leading to showing a net loss. But if you analyze the results further, our EBITDA generation, earnings before interest, tax, depreciation, were 1.94 billion shillings, nearly $19.5 million, and profit after tax but before forex exchange loss was nearly $8 million. So the company is still very profitable on a run rate, especially now that we have more clinker production and more volume growth in the second half of the year. We expect those numbers to improve.
ARM now have an advantage over some rivals and are keeping their margins steady. The company plans to raise $50 million and $75 million in local currency from the capital markets to replace some short-term debt in the future. Leslie Marungu, CCTV.